All right, everyone, welcome to my live trade stream, May 3rd, 2021. Glad to have you guys with me again here for another live stream. We've been doing these every single week now for the last couple of months. And what I basically do is jump on here and I will go through what's going on in the marketplace. We'll talk about news. This week, what I want to do is I want to take charts and I want to look at an overview looking at implied volatility as we're coming through yet another earnings season. So that's something that I want to take a look at as well. We're going to look at May's money counter. So the money counter is a patent pending tool that we created years ago that we're able to look at thousands of stocks, millions of data points to really get the best buy and sell dates that are out there. So we'll look at that and we'll see what the money calendar has to say for the month of May. And is it in tune with the sell in May and go away strategy, which is we're talking about as well. And then finally, what I thought I'd do is jump in and show you what moving average crossovers are and how you can take a look at those. We'll take a look at some moving average crossover buys in the market too. So it's a very simple strategy that any of you and anybody can do. All they have to do is just have access to moving averages. You don't need my software to do this. All right. So guys, for those of you that are brand new with us, I want to welcome you to the channel. You know, we do this again every Monday at noon. And before I begin, I want to simply first talk a little bit about, let's go ahead and get the housekeeping out of the way. So housekeeping goes like this. This disclaimer that you see on the screen, this is something you can read entirely on your own. All you have to do, if you want to read the whole thing word by word, is just hit the pause button, not if you're live, but when you receive the recording. I'm going to mention two quick things right now. Number one, stock and options trading and cryptocurrency have large potential rewards, but also large potential risk. And number two, I'm not an investment advisor, all right? I've been doing this over half of my life, but I am not an investment advisor. I don't manage other people's money, all right? So keep that in mind. What I offer you is education on how I spot rules-based opportunities, create alternative trades in the marketplace by using things like options. And number three, planning, executing, and managing those trades. That's what I do, all right? And I can tell you the plan is to teach you how I do this, okay? We offer a lot of premium stuff out there. We have premium publications. Right, I do that through our publisher. We also have premium software. We also do some very in-depth education as well. A lot of that you can get started by simply visiting my website, which is tomgentile.com. I've got some free reports out there for you. We also have free software. The links for all of this are below, so you can check that out in the description how you found us here. So I want to welcome everybody who's coming in from different parts of the world, and glad to have you here for another episode. Real quick, I'm going to talk about, the market news is really a spillover from last week. Everybody seems to be talking about the Biden tax plan and how income taxes are going up. Unless you make $75,000 or less, because I see people making $75,000 or less, their income taxes going down, possibly not paying any income taxes. All right, so that's going to be a big base. But for those of you that trade, right, you could see your long-term capital gains be as high as potentially your short-term gains, even higher. Right, we're seeing top-tier long-term capital gains going up above 40%. So there's some things there that you need to think about as well. So that's the market news. What we'll do is we'll look at those IV charts right now, and what I'm talking about with IV charts is when I go to my tools at tomsoptiontools.com. Now, I've got charts up here. Most of this stuff all of you can get. All right, everybody in the room here. I don't care what you're using. All right, you can get charts. You can get price charts. You can get the moving average charts. So if you see the purple line, you see the brown line that are below these charts you see here. Let me bring it up and show you. All right, moving average, But not everybody can get this red line we see here. And this red line really is great in two areas. This is the option trader's line. It tells me whether I want to be a buyer of these options or a seller. And right now, in the S&P, it makes sense that if you want to use options as a surrogate for the stock, buying options in the S&P makes sense. If you're bullish, then I'm looking at something on the call side. If you're bearish, then I'm be looking at something on the put side. But that line tells me that these options are cheap relative to where they've been. All right, let me bring up the big mouse. Cheap down here, all right, as the volatility is kicking up into close to 14. But just a few months ago, we were trading up in the high 20s. So this is telling me that the options premium has significantly dropped from where it was at the beginning of the year, right? This is SPY. Now, something else I want to talk to you about, and I'm going to tease you with it right now. Take a look at this. I'm going to slide this over. That's my, someone was saying, oh, but Tom, you've got a big account. Only big accounts can make money. Not entirely true, right? This is my iPhone, and I'm actually reflecting it right into the screen. And you can kind of see here that if I go and, let me click in this spot right here. So this was just a couple months ago in February, all right? Not a whole lot of money here, all right? Where did it go from here? Well, doing pretty good here, all right? How in the world did I make 110% of my account in the last 3 months? It didn't go straight up. There were some pullbacks. Here's a pullback. Here's a pullback here, all right? What am I doing in this account? I'm going to share that with you today, all right? So I want to show you that, this isn't the investing world that we were once in, eons ago, all right? This is an investing world and a trading world that literally everybody can do. I opened a Robinhood account recently. And so I did that because I wanted to share with folks that are part of my group and new folks as well, that you don't need a multi-million-dollar account to generate returns. What you need is a rules-based trading system. In my humble opinion, you need a rules-based trading system, something that's repeatable. All right, I'm a pattern trader, so I like patterns that repeat themselves. And then you need a way to curb risk in the marketplace. And sometimes risk is using options. And sometimes risk is not. There's a couple stocks in my portfolio that are cheap stocks that I have that I don't need to trade options on, right? So these are some things out there as well. But rules-based trading, and map that or match that with an appropriate option strategy. And then what you've got yourself a high probability or low risk scenario, sometimes both. And it's just a matter of following your rules. So we're going to go do that today, right, as I go search for things. S&P 500. Obviously, if we take a look at this chart, higher highs, higher lows, and here we are another day where we're really kind of getting up there around that 420 level. That 420 level up is also coming with low implied volatility, and as you can see, these moving averages, and I'm looking at the 10-day and the 30-day moving averages, and that crossover where the 10-day gave us a bullish signal was back in March when we were trading around 395. Right, we're 25 points higher now as we go into May. 6 weeks later, 25% higher, or not 25 points higher. 25 points higher on this move. Let's see what the rest of the market. So I like to look at an overview of the market and see what what's that overview telling me right now. Okay, so that overview is really telling me that so far the stock market wants to go higher. Let's take a look and see what's going on with bonds. And are bonds moving in the opposite direction? For the most part, bonds are moving in the opposite direction, and that's great too. All right, we see that as well. So bonds going down is telling me that the stock market really is, it's confirming its higher highs. Folks are coming out of stocks or coming out of bonds going into stocks. Because guess what? I'm looking at everything out there. Part of my gut tells me that this money is too easy and that too many people are making money in this market. And usually when that happens, there's a correction that comes afterwards and really kind of puts things back into balance. That hasn't happened yet, all right? And one of the reasons it may not happen soon is because The government is flushing so much money out there. There's so much liquidity being put out in the marketplace, right? In the form of, well, you and I know, stimulus checks. And stimulus checks are really just kind of are telling us that people are taking this money. They saved the first group of stimulus checks. Now it's time to spend that second group. And so it's burning a hole in the consumer's pockets to get out there and spend. And that is hitting the bottom line of a lot of companies and a lot of publicly traded companies. And so that's why we see stocks going higher. And that might be the reasons why stocks are continuing to move higher, at least for now. Look at UUP, the cash, all right, US dollar. US dollar hit a high just a month ago, has been pulling back since, and now we're getting down to those lows, those yearly lows, right, that are down in the low 24s on UUP. I don't trade UUP, by the way. I look at it to trade other things. One of the other things I like to look at it to trade is USO and oil and commodities and commodity-based stocks, right? And so take a look here, if you would, at USO. And we talked about USO and oil stocks potentially moving higher and trying to retake those highs that were just below 45. This was back in March. We had the pullback in oil. We stuck the 40 level. 40 was a great support price on USO. And here we are at 44. And it looks to me like if we move in the correct direction, the high 40s, we should see the high 40s in USO sometime here within the next 2 months. So I'm really seeing by July 4th, we could see USO 10% higher than it is now. We could see gas prices 10% higher than it is now, and that's because as we're hearing more and more news of the vaccine rolling out, and we're getting more people taking the vaccine. What is it? Over 100 million folks in the U.S. now have had the vaccine. So that represents 1/3 of the U.S., right? And that's gonna start to slow down, and you're gonna start seeing those mass amounts of people that are gonna be coming out. Okay, the mass amounts of people that were getting vaccines. Obviously, we're not gonna see that happening going forward. We're gonna see those mass vaccination places start to go away, and it's gonna be replaced by your doctor. All right, maybe CVS pharmacy, but these drive-up places are gonna go away, because they're not going to be needed soon. And so they're saying, by the time we get to Memorial Day, time we get to 4th of July, this could be behind us. Whoa, but the variants could be coming. That's a possibility too. Right? So so that's something that could be out there as well. And so you take a look at USO. This is telling us that the economy is in rebound mode, that there is demand out there. People want to get out and do things, right? It's also going to hit stocks, oil stocks, Chevron, Exxon, stocks that we were talking about last week are definitely on the rise. All right. So that's USO. Gold. All right. Now, gold is one of those ones, and I'm going to get into cryptocurrency because I see a lot of chatter about crypto, and we're going to get into crypto. Ethereum made new highs again this weekend. Yay for me and anyone else that owns Ethereum. And if you've heard me, you've been listening to me talk about Ethereum, I've said Ethereum is going to overtake Bitcoin as far as the runner. All right, that's where the real value is. And I'll get into where my Ethereum predictions are. And hold on to your seats because you're going to love this. It's coming up in just a few minutes. But take a look at gold. I like gold. The reason I like gold is because pretty much no one likes gold these days. And, there's this old adage, and I've believed in this for the longest time as someone who is an investor as well as a trader, is that when all the negativity comes out in a product, in an asset, and it stops going down, you've pretty much bled out all the sellers. And I really believe with gold, when we hit these low points down here on GLD at 158, we bleeded out a lot of sellers. And as we moved higher, we've still been hearing negativity about gold. Oh, it's going back down to $1,000 an ounce. It's going back down to $1,200 an ounce. That may be so. But as a long-term investor and a long-term holder of gold, physical gold, GLD, I like picking it up at these levels because based on where our U.S. dollar is going and where it is right now, gold fundamentally should be at $2,500 an ounce. Should be at $2,500 an ounce, which right now GLD or gold itself is around the $1,700-$1,800 an ounce area. Let's call it 18, and that tells me that at 25, that puts us a good 25 to 30% higher than where we are right now. It's hard to say that about Bitcoin and Ethereum because they're making new highs. Ethereum, especially, making new highs as we speak. As a person who bought Ethereum, I was buying it as low as in the 200s. I've now seen a 12x return on my Ethereum, and it's hard for me to go step up to the plate and purchase it now, but I'm able to hang on to what I have now if we get those swings. I don't know how many people could be, but that's an all possibility. We'll get to Ethereum and Bitcoin in a moment. Where's gold going? Well, gold's hitting some resistance right now up here around 168. And this point right in here in the chart is a very interesting area, because if we can get above this resistance level, then I believe the next target's going to be the mid 170s. And 170 is going to be sitting right about here on the chart. Now, implied volatility with GLD goes up as the price goes up. Notice the price came down. We had that bump up in IV because gold had hit some new lows back in February. But then it came right back down, and it was down lower when we hit these lows again just before April. Now we started to go higher, and it looks like we've kind of fizzled out on the low side of IV. So I think if gold starts jumping up, we'll start to see the implied volatility, the option prices of GLD, continue to move as well. All right, so that's GLD. Let's move forward. FANG, very quickly. So last week I talked about FANG stocks. I made money in FANG stocks last week as the earnings came out as a net seller of premium. I did not want to go in and buy these things, so I was selling out of the money premium on both sides using something called an iron condor. And iron condors did very good for me. The two that I targeted, actually I targeted 3 last week. I could only get filled on 2. Facebook was not one that I targeted. As you can see, Facebook popped up. Now, Facebook's interesting right now because we went from, if you take a look here, Facebook was trading in the low 3s. Then we popped up, and Facebook hit some new all-time highs at $330 a share. Now, between this 332 and 322 area, we've stayed inside that range. We break below the low that occurred the day after earnings, and I believe we're coming back down, and we're going to target down into the areas that we see the old resistance and where we were before earnings came out. That's a possibility that that's going to happen, right? Because Facebook may have overdone itself after earnings. Let's take a look at Apple. This is another one that I really, really wanted to sell some premium in here. Unfortunately, I priced my option trades higher than it would allow me to get into those. All right. So anyway, I'm looking at Apple. Apple had great earnings. Stock is kind of faltering again, and this could be a short-term area of support. But it's interesting what I saw happening. If you take a look, Facebook has come off after earnings. Apple's come off after earnings. Amazon, I tried to get into selling some premium. And again, here's another one that I set too high. I set the bar too high for Amazon, and I couldn't get filled on this trade last week, and it would have worked out brilliantly because the stock didn't pop at all. In fact, it popped up and closed down on the day and ended right back down here, pretty much where it was the day before. A great day for anyone that sold premium on Amazon. So that's Amazon. Netflix, that earnings came out the week before. Nothing I was doing there. In fact, Netflix has been sitting in a tight 20-point trading range since those earnings came out. However, this little move above, if we can get above and close above the area, the high that we had on Friday, then I think Netflix could make a run back up. Google, I did get into some premium. And that premium, I ended up taking in 100% of the premium because I let it expire on Friday. That was a great little trade there, selling iron condors. Tesla, same thing. Sold some iron condors on Tesla and let that thing go to expiration, and that did very well too. But when you take a look at all these, and I cycle back to SPY, one thing is apparent. It's very interesting that the majority of these guys had blowout numbers, and the stocks didn't move. In fact, if anything, they dropped. What does that say about the market as a whole? Are we getting toppy? And so I ask all of you that are in the room right now, there's about 550 of you in here right now, I'm going to ask you all this question. And I know I'm going to get clogged up with some live chat answers, but I want to hear from you. Where do you think this market goes from here as we go into May? And I'm only looking for one of three words: up, down, sideways. Where do you think the market goes in May? Do we go to higher highs? Do we go to lower lows? All right? Or do we just move sideways until we hit the next event? I want to hear from you. So give me a chat right now. I see some folks coming in right now telling us where they think the markets are heading. George says it's top heavy. Sideways to down from commercial communications. Jill sideways. Eric up. Daniel up. Stan down. Jim sideways. Did I see a Vandy Zandy in here anywhere? I grew up with my neighbors were Vandy Zandys, and we had some friends there. Grew up and went to school with a couple Vandy Zandys. So great name there. All right. But I see a lot of you that are really kind of coming in saying sideways, and so just curious. I love to do when I talk to folks and ask them where they think the markets are heading. I love to find out through our chat. It gives me kind of a sentiment value of our group of option traders. So boy, they're piling in here right now. That's for sure. So again, tell me what you think, up, down, or sideways. So as you're bringing those in, what I want to do now is I want to move to the month of May myself. So one of the ways that I look at May is by going to something that I call the money calendar. And the money calendar is a way of, and I've got all kinds of I can look at money calendar by the week, by the month. I can look at holidays. I can look at the clock during the day. I can look at cryptocurrencies on a calendar. I can look at cryptocurrencies on a clock. And I can even look at the money calendar app that will dial it down to just that stock. All right? So that's something that I like to look at as well. This is the month of May. And so when I'm looking at the month of May, and we're on May 3rd, so I'm just going to bring up what we see for the month of May. You know, when I look at this, what this tells me, for those of you that have never seen this before, is that I have a way of taking a look at the top most popular stocks. And if I've got something over the last 10 years that goes up 90% of the time or greater, or down 90% of the time or greater, then it shows up on this calendar. And so I'm going to show you what we're talking about. Let's take a look at May 3rd. So May 3rd shows me that EA Sports, for the next 26 days starting today, has had a history of going higher between now and, in this case, June 7th. The last loser, the last time this thing did not go up, was 9 years ago. All right? That's good to know, too. But if you see all this green on the screen, these are bullish patterns where at least 9 of the last 10 years, and even some like United Healthcare, for 10 of the last 10 years, UNH has gone up over the 28 days that start today. This is some good information. So if I go in and I look at UNH, I'm going to try to look at some more information on it. So the bullish pattern starts today and runs all the way out to June 9th. Now I know that this has averaged just less than $8 per year, per pattern. All right? 100% accurate. That means the last 10 years, United Healthcare has gone up. Now take a look at 2011, only went up $1.17. 2012, $1.50. Look at 2020. Last year, it went up $22.29. Well, what actually happened with United Healthcare then? Well, I want to find that out. So I come down, and what I did was I clicked on 2020, and I'm looking at what happened during the pattern that starts now and ends 28 days later. Well, it was a $282 stock. that became a $303 stock 28 days later. So I can take a look and I can utilize this strategy. I can utilize this data. And I can say, all right, I want to take this pattern and I want to make an option strategy from it. All right. Now, at this point, no, Eric, not too many a year round, that's for sure. Didn't Van Zandt, wasn't he didn't he used to be a Vandy Zandy and he changed his shortened his name to Van Zandt? Don't know. Sorry, I went sideways on everybody else there. But anyway, take a look at UNH, May 3rd to June 9th. All right, so I have a pattern here. Now, there's no guarantee the pattern's going to work going forward, but it's had a history of working. So if I were going to follow UNH and take a trade on UNH, I could just buy the stock. I could buy United Healthcare stock. Let's see what it's going for right now. So if I type in, this is my Schwab Street Smart Central, UNH. All right, so the stock is trading right now at 405.50 by 405.62, and that's going to change a lot here. But you take a look here, 405.50 by 405.62. So I'm going to spend $100, or if I buy 100 shares of this stock, that's going to be, take a look here. If I buy to open, or if I buy 100 shares of this stock, and let's say I do it in a limit order of 405 as an example. Let me preview that one. That's going to cost me, well, it's $40,000. $40,000. Okay. What can I do to allow myself the leverage of $100,000 or $40,000 with 100 shares of stock, but not spend $40,000? All right. So I have to go and buy some call options. This is just the first example. All right. And in no way represents what I would do, and in no way represents a recommendation. But let's take a look and see what we could do. Now, if you remember the money calendar, all right, this is from May 3rd to June 9th. So I gotta do something with UNH with an expiration date that's at June 9th or later, because that's the pattern. If I want to stay in the pattern all the way to June 9th, I need something that expires after June 9th. That's right. Buy options, yeah, baby. That's what Paul says. Let's go back and look at see what we have. So if I were going to buy to open, one contract is good for 100 shares of stock. So June, there's some options that expire on June 11th. They're 1090 by 1350. Now, how many of you in the room think that's a pretty wide bid-ask spread? That is nearly, that's over $2.50 between the bid and the offer. That's a big spread, all right? Imagine your spread on your house if you were selling or buying were that wide. That's pretty wide, all right? So we're talking about a 20% spread there. So how do we reduce the spread? All right, well, we could go and do a limit order. Maybe we do a limit order, we fill it at $12, and we go right down the middle. All right, now $12.20 down the middle, maybe you get filled, maybe you don't. Probably you won't. All right, if that's a true bid, 1090, and that's a true ask at 1350, you more than likely won't get that $12.20. Maybe you could get filled at $12.50. You know, I often get asked, where do you put your prices when you're buying options? I go down the middle, and then I go a little bit toward the offer, because I know a lot of times I'm not going to get filled right down the middle. But if I give them a little, and I got to think, well, what do I stand to make on this? All right, back to the money calendar. All right, so look at this area here. $7.96 was the average trade. So let's round that up to 8. So if this particular stock, if UNH goes up $8, then I have to ask myself, what is this 405 call going to be worth if we go to $8? Well, if it goes up to $4.13, that's an $8 increase. Well, if I pay $12.50 for something that could be worth $8, that doesn't make sense at all to me. That's a losing proposition. All right. So that bid and ask, first of all, that's a big deal to me. So that's the first area I got a problem with. Because if I look at 8, but let's go back and look at the money counter again. That 8 reflects 10 years. Well, 10 years ago, this thing was only at $1.17. But look at the last 5 years. The lowest was $6.18 and the highest was 22. So is it possible to say that maybe within the last 5 years we might get 12 points instead? We might get an extra bump because guess what? The stock price back in 2011, look where that stock was trading at. $42. It's $405 today, folks. $42. Look at where it was trading at 2016. It was still $130. So it's safe to say that if we looked at this on a percentage basis, that we could stand to make a good bit more. So there you go. So you've got a potential move there that could put us in double digits. Now, let's say we went up $12.50. Again, if we're paying $12.50 for something that's going to go up $12.50, we're basically trading paint here. So what we want to do is we want to factor in how far this thing is likely to move, and will it make sense with this option strategy? And it doesn't. So the option strategy we need to be looking at on UNH is potentially a call spread. A call spread is when you are buying, all right? You're buying options. Let's look at those 611 options again. But then you're selling something higher priced that you could bring in premium for, and therefore you're able to offset your cost. So keep in mind, I might be paying somewhere around the $12.50 area for this 405 call. But what can I bring in on the other side? And it looks like maybe I could bring in $7.50. So if I'm going to pay $12.50 and I'm going to bring in $7.50, that's a net. That's a $5 right there, $5 cost. So it's a $5 cost. So now what I'm doing is I'm giving myself the right to buy UNH for $405, and I'm obligated to sell it at $415. So basically what I'm doing is I can buy it at $405 and I'm forced to sell it at $415 if someone claims it from me. That means I'm going to make $10 on this trade all day long. If I'm only going to pay $5 for something I can make $10 for, that's a potential double. That's how I use spreads. All right? I've done a couple of things here. I've lowered the cost of this trade to $500. See this when I preview this order? Look what I'm doing. The trade is buying the 405, selling the 415, being able to do that for $500 plus a little bit of an exchange fee. I'm canceling that because I don't front run trades. I don't put trades out there and then tell people to do them and then I make money. That's not what we do here. This is education. So what I'm showing you is that you can reduce that risk down. You can increase your return on investment because now I know that I can make at but not over 100% gain. All right? But in order for that to happen, UNH has to be at or above $415 by June 11th or on June 11th. Then this trade maxes out in profit. Okay? So at this point, let me just look and see what I got on here. Use the walk limit feature. Absolutely hat trick. That's my hat trick. That walk limit feature is awesome. And if any of you that use Schwab, and again, I'm not recommending brokers. I'm not in that business. You find what works for you. But there are a couple brokers out there that really have some great strategies. One that Schwab has is what's called the walk limit. And so you can go in and you can do a walk limit order. And what this does is this allows you a starting and ending price. So you could go in here and you could say, hey, you know what I want to do? I'm going to put that start price at $4.50. But I don't want to pay any more than $5 for it. And let's do a price increment of 10 cents. Now, and then finally, this could be put in seconds. So I can put this out here to 5 seconds. So what did I just do? Tom, what did you just do? I'll show you what I just did. So this order shows me I want to buy to open the 405 calls, sell to open the 415 calls. Doing it this way means that I want to start it, and I want to see if anybody will take that order for $4.50. I want to go as high as 5, but no more than 5. So it'll stop at 5, and it'll be put in as a limit order at 5. But it's going to start at 450 to see if there's any takers. And it's going to go up from 450 by 10 cents to 460 to 470 to 480 to 490 to $5 every 5 seconds. It's going to put that order in and pull it back if it doesn't get filled. Put in the new order, pull it back if it doesn't get filled, and so forth and so forth and so forth. And a lot of times it's amazing. I might actually get filled somewhere in a price area that I may not get filled at all. Now, Hat Trick threw another comment in, and I totally agree with him on it. He says, look at this spread that's going on. This spread is absolutely insane. And he's absolutely right. So, what's the other way? I want to see if anybody knows the answer to this question. What's the other way to make those bids and offers come together other than just using a limit price? Someone out here, tell me if you know another way to force liquidity into this trade. Does anybody out here know this? If you do, or if you think you do, please let me and the others know right now in the chat, because I'm going to tell you my way of doing it. But I want to know if any of you in here already know how to do that. And as I can see, based on the little bit of chat that's coming in, not a lot of people know this strategy. But you know what? I'm going to show it to you, and a lot of you are going to go, oh, yeah, that's how we do it. All right, so shoot the market maker. No, that's actually going to hurt liquidity if you shoot the poor market maker. Thompson, you got it. You are the man. You came in, and you should know this because you and I talk all the time. All right, we chat all the time. We're on webinars all the time. Carlton, maybe. All right, if your idea is to add a butterfly to it, to take this spread and add even more wings and legs to it, that is not the way to use it. King Clee, you are correct. Let me just show you what happens. If you use the third Friday option, he says monthly options, but I know what he's talking about. Take a look at that option that expires on the third Friday of the month. June 4th is the first Friday. June 11th is the second. June 18th is the third. So I'm going to change this to the 18th. So I just changed it to the 18th. I need to change the strikes to the now. With the strikes, they go a little differently. All right. I'm going to have to ratchet myself up to the 410, 420 because they don't have 5-point strikes on UNH that expire on the third Friday. But look what just happened. 935 by 985, 555 by 6. Those $3 spreads just dropped down to 50 cents, 45 cents. So that's how you do it. And sometimes you might have to change your strikes around a little bit. Like, for instance, I noticed now that I'm 325 by 430. All right, so I'm well below this, but that's also because we just moved out of the money on this trade. So let's move into money. Let's look at the 400 and the 410. 485 by 595. So now I'm a little closer to the wheelhouse, but you know what else I have? I have a trade that is now more in the money. Because in the money, it's going to be priced higher. It also has a higher probability of being correct. So I wanted to share that with all of you. All right, so there you go. Couple things we learned here. The money calendar, first of all, for the month of May, is not really sharing. It's the same thing that a lot of the old timers are looking at, which is sell in May and go away. Because over the last 10 years, this is what the month of May has looked like for the most popular stocks. It's been mostly on the green side. Green means more of these stocks are going up over the next 30 days than down. And it's been doing this for now the better part of 10 years. If I go out and look at the 20-year pattern, let's just take a look at the 20-year pattern in May. Same thing. 20 years of data revealed to me that the most popular stocks out there tend to go higher in the month of May, at least till we get out past Memorial Day. Then we start to change colors. We start to see a little bit of bearishness creeping in. But you take a look at May. This is May 2021 projection going back, looking at 20 years of data on the most popular stocks. This is what we come up with. Okay? So, that's the stock market. That's the money calendar. Let's move into cryptocurrency for a few minutes. And to go to cryptocurrency, I'm actually going to move over and I'm going to look at cryptos. And you know what we can do is we can look at the crypto calendar. And the crypto calendar right now, I use Bitcoin because Bitcoin is, if Bitcoin's going up, then a lot of the big ones are moving along with it. So also the reason why I use Bitcoin and Bitcoin only is that Bitcoin is the only cryptocurrency that's been around for 10 years or longer. Nothing else has been. So I got to use something that I have patterns on time and time again. This is the last 7 years on Bitcoin. And so if you look at where Bitcoin was and is, it's showing that right now we've got some patterns that are happening. Here's one that I think is especially interesting, is an 83% probability going back 7 years. 6 of the last 7 years, we've seen Bitcoin move higher to the tune of about $3,000. Now, I want to take you back and show you where Bitcoin was. 2015, 16, 17, 18, 19, 20. And you can see here that, 656-point move in 2020. But Bitcoin was less than $20,000 last year. Now, one of the things we're looking at doing, and we're going to be adding this real soon, is adding a percent gauge on here because looking at just the overall numbers doesn't do us justice. We want to look at percentage moves, and I think that's going to give a better representation of the numbers. All right, because if I look at last year, here's Bitcoin last year at this time. Was trading on the low at 8,500, was trading on the high at 10,000, and really was kind of in a swing. It just happened to be higher during this time period, 30 days later than it was, 30 days out from where it was now. Now, I think Bitcoin is going to be higher 30 days from now because it's sitting on and it's hitting resistance levels. All right, so if we take a look at, let's go into coin market cap. I'm going to bring that up and slide that in so everybody can see it. All right, coinmarketcap.com is a great place to go, and it's also going to be where I can talk about how I see things going as far as Ethereum and why I think Ethereum is going to be such a great one to chart and look at. So basically, look at Bitcoin for a moment. Bitcoin's at 57,836. Yeah, it's plodding along right now compared to Ethereum, which is up 10% today, 11%. Binance Coin is coming and give us the third spot. Ripple's number 4 on the market cap, and Dogecoin, 40 cents. I told you I don't like talking about Dogecoin because I think it's a joke, but it's a joke that now Mark Cuban and Elon Musk are talking about, and is driving a lot of money in there. And the other thing too is that it now is no longer a joke because Mark Cuban is allowing folks to purchase things within the Mavericks Center using Dogecoin. So now all of a sudden Dogecoin has become a little more than just a joke. But you got to realize something. Dogecoin is going to have a lot of movement, and that's also going to come with a lot of volatility. All right, that's all I'm going to say about Dogecoin. Like Forrest Gump, that's all I got to say about that. All right, let's take a look at a chart of Bitcoin for a moment. So this is a chart of Bitcoin. If you take a look at the year-end chart, you can see here that I want to look at the year-to-date. And the year-to-date shows at the beginning of the year, December 31st, Bitcoin was trading down here in the 32s. All right, now Bitcoin is trading up, at the $57,000 price tag, but it was much, much higher. We were trading at 63 back in mid-April, just about 2 weeks ago. Now, I want to back up and I want to look at Ethereum. Because the reason I want to look at Ethereum is because my price tag on Bitcoin isn't changing. I still think that there's a very good possibility we could see 100,000 by the end of the year on Bitcoin. But Ethereum is the strong player right now. I said it before, and I said it before that, and I said it even before that. Ethereum is the one that is the major player, upcomer right now in terms of the big coins, not the small ones, right? The big coins. And the big coins, Ethereum offers such a value to the network, such a value to blockchain technology. That's why it's garnishing these big moves, up 10% today, up almost 11% now, trading at new all-time highs. I want you to pay attention to this number right here. What is that? That is the market cap. Take a look at the market cap of Bitcoin, all right, which is just over 1 trillion. It's approaching 1.1 trillion. Take a look at the market cap for Ethereum. Ethereum's market cap was very low, and it's now playing catch up. So the market cap of Ethereum doesn't even need to triple in market cap to catch up with Bitcoin, where not too long ago it had to move 5 times. It had to go 5x to catch up. Now it's less than 3x. So it means that Ethereum is moving up in a much larger percentage moves than BTC. If BTC stays exactly where it is, then Ethereum getting to 6,000, all right, would put us in an area, well, not even 6,000, I had to go a little bit higher than that. Actually, no, I said 10,000 last week, and I stand by that. 10,000 Ethereum would put us up very close to, or maybe just over, the market cap that Bitcoin has right now currently at the 57,000 mark. And I see folks out there saying, oh, Ethereum's going to 4,000. Yeah, that could happen next week based on where it's going. But I have a longer term bump on Ethereum, and I think Ethereum could be a 10,000 point mover. I believe we could be at 6,000 by the end of the year. I think we could be at 10,000 inside of the end of 2022. Maybe quicker. Who knows? All I know is that my real prediction is we will see Ethereum catch up to Bitcoin in terms of market cap. Because again, Ethereum is a real player out there in the term of cryptocurrency. All right? And so that's what we see. All right, so the other point I want to make is if we take a look at the chart of Ethereum. Let's go in and take a look at it right now. So I'm going to click on the chart, and this chart is going to give us that all-time. I mean, take a look. This is Ethereum was trading at $5 I mean, it was literally less than $1 back in 2015. All right, I wish I mined Ethereum instead of Bitcoin when I was mining it back in 2013, but it wasn't available then. Started in 2014, but you know what? Forget about what happened back in the 16s, 17s, 18s, 19s. Look back at 2020. Go back a year ago. Look where Ethereum was trading. It was trading under $200 at that time. All right. I was buying Ethereum, pretty big purchases I was doing last year in the June area of 2020. Right? These weren't $100 purchases. These were big. This was pretty big money. And so now I'm sitting on a 12x. But I'm sitting on a 12x, so I'm seeing this thing hitting new all-time highs, literally minute after minute. And I'm saying to myself, I have a lot of staying power because I own it. I own the majority of it down here in the low hundreds, the $200 to $300 price range, right? So when it does these big pullbacks, where it pulled back from 2,000 down to 1,365 back in February before moving higher, I can survive those pullbacks. One of the things that people ask me, would you buy it now? Well, if I didn't have it, absolutely. But I'd be looking at it as an investor, not as a trader. I'd be looking at that $6,000 to $10,000 mark. That's what I'm looking at on the horizon as an investor. So I do think it has some real long-term movement to it. So I'm leaving that with those of you. But I do stand by my price points that Ethereum will catch up to Bitcoin in terms of market cap. Where that ends up in price is anybody's guess, all right? So that's what I see. Now, finally, as we turn to the final segment I want to talk about today, and I want to thank all of you that are coming in and answering questions and leaving comments, and I want to apologize to all of you right off the bat. I was supposed to get Super Chat in today, and it didn't happen on time, so I'm going to try to get Super Chat in here really soon. For those of you that, before I get into this last section, do me a favor right now. If you found this or find our channel worthy of your time, then please help us out there on the like button. Hit that like button. It does help support the channel. I want to mention one more thing. If you subscribe to the channel, then ding that bell and you will get all of our videos. We do about 3 of them a week, all right? And we put them in different categories. Some of our videos are in individual stocks. Every week we do a live trade videos like this. Also, if you join us on at the end of the weeks, I'm on with my cohort, and that is Chris Johnson, and we're just kind of talking about anything as we do our podcasts. And sometimes our podcast will go sideways. We'll talk about things like taxes, or we'll talk about things. We'll go into brokerage firms. We'll talk about technical analysis. But it's a chance for Chris and I to vent a little and also open up our portfolios and tell you what we like and tell you what we have going on in the marketplace. But guys, please, I can't emphasize it enough. By hitting that like button, it really does help support the channel. I'm going to mention one more thing too. We do monetize the channel, but all of our proceeds from our YouTube channel, from all of our videos, all right, that goes to charity. We donate to various charitable events. If you go to tomgentile.com and you go to the Giving Back section, you can see exactly who we have donated to in the past. So that's what we do. All right, so you hitting the like button, you subscribing, you watching our live trades in our live channel, you are helping to benefit, not me, you're helping to benefit charity. That's what we did. We did that in 2020 when we really started this channel. We've only been around less than a year now as a YouTube channel. I mean, I've had YouTube channel for years, but we never really put it out there and did anything with it until about May of last year. So we're on our 1-year anniversary on the channel. We're very excited. We love you guys as subscribers, and we want to continue to do this week after week. All right, I've said enough about the channel. Let's get into the last piece I want to talk about. And the last thing I want to talk about is moving averages. So let me throw a stock up here. Let's take a look at Amazon, AMZN. And I'm going to take Amazon and I'm going to do something with it. I am going to remove this IV. I want to put none on here. I want to make it a clean screen so you can see the chart and you can see, more importantly, the lines we have here, which are moving averages. So moving averages, this is one of the things that was the first indicator I ever used as a trader. It's one of the easiest indicators that I have ever used as a trader. I've also found it, as moving averages themselves, to be one of the toughest indicators you can use to make money because there are so many of them out there. Where do you start? And so long ago, my trading partner, God rest his soul, George Fontenhills, used to love talking about the 10-day and the 30-day moving averages. And I found them to be actually quite interesting. And so I found that I don't know what it is about the 10 and 30-day moving averages. I think they coincide with big swings in certain stocks, and I think it has to do with earnings, all right? And the earnings are, come out quarterly. We see right now what's going on with Amazon is we saw the swing where the 10-day crossed over to 30 back here in April, a month ago, and that was happening with the stock trading at 31.50. What's been a really nice move is it's moved up to 35.50, but now we see a drop down. If this purple line crosses back below, then that indicates a sell. This particular moving average crossover, I believe, works best on stocks that are highly volatile. The problem with stocks that are highly volatile, they got big swings. So you got to realize that it's best to take little amounts of money, little amounts of capital, in my opinion, and put them towards these. So I think the big question that many of you are probably thinking about right now is what's looking like a buy right now. I'm going to share that with you. So over here, we have a scan on our tools, and it looks pretty daunting when you look at crossover scans. And any of you that use our tools, you can find it in our crossover patterns. But we have crossover signals, we have crossover displays, we have crossover back testing. We have all kinds of stuff on here. But if you just simply click the search button, and I'm using the S&P 500 optional, this is what came up for me today. I see Hess on here, Comcast, Carnival Cruise, I believe that's Devon Energy, and Marathon Oil. And if you look below, that's exactly, I got them all right this time. There's the stocks, all right? Here's their symbols, here's the stocks, here's where they're trading at right now. These are call option trades. These are trades that are based on the move, but you have the ability to go in and flex these around at your will. These are just ideas. Slippage, something big we talked about at the beginning of the program. We can go through and look at the slippage and we can say, wow, 0.1. Which one's that? Carnival Cruise Lines has a 0.1 slippage. It's IV rank. Now, an IV rank is how cold is it? That means how cheap is it? And how hot or expensive is it? Look at Carnival, 3.5. That's fantastic in terms of a rank. The delta really tells me where that option is and how much it's likely to move in terms of the stock price. And then finally, we look at something called percent to double. This is how these are ranked. Percent to double we talked about last week on the channel. I'll bring it up with you real quick. The lower this number is, the smaller that stock needs to go to theoretically get a double on this option trade. So if I go out here and I take a look at what we did, I can see that based on that 10-30 moving average cross, these are 5 stocks that popped up. Well, if I were to take a look at these stocks, let's take a look at Hess real quick. So I click on Hess and I see, well, the last time Hess had some buying opportunities, it had a 10-30 cross over here and went from about the low 40s to the high 50s. Nice move. Then it had another buy signal above 60. That ran up to the high 60s, and it's got its third moving average crossover today, just about a week after its earnings report at the 76 mark. Notice that, again, no guarantee it's going to do what it did in the past, but these are nice moves here in the past with Hess. So I would look at each of these, and based on those determinations, let's look at Carnival. What's Carnival done? Carnival had a buy at 16 and a sell in around 20. Then it had to buy again at 20, and it had to sell up here around 26 or so. Then it had the buy at 28. It had to sell just below 28. It has the buy again right around 28. And so that's what the moving average crossovers are showing for Carnival Cruise. All right. So there you go, guys. Those are the moving average crossovers. Remember, what we're looking at is we're looking at stocks right now where the 10-period moving average cross is crossing above the 30-period or 30-day moving average cross at this time. All right. I see you guys kind of popping in there. I appreciate the comments. Someone says, where's the bell? The bell's down here on the floor. I can't pick up the bell. It's too heavy. That thing weighs like 20 or 30 pounds. Actually, I could pick it up, but I'm not gonna. But anyway, the bell's here. Again, guys, if you're just joining me, if this is your first time that you've seen us and you've been on the channel, we have hundreds of videos out there that I invite you to go see. We have them in stock selection. We have them in option, the way we look at different option strategies. And, of course, we have our live streams. We have our podcasts that occur every single week. If you found this video educational as well as entertaining, do me a favor and hit that like button right now as we get ready to sign off here for our live stream. That will help support this channel. It helps grow our channel, and it also helps the monetization, which we then turn around and give that to charities. So all of our profits, all of the money we make on this YouTube channel goes straight out of our hands and right into someone's hands or charities out there that need it, right? Because I don't need it, but I want to put it in some hands of those that do. So thank you guys. If you're interested in checking out our tools, we have a free 2-week trial down in the description of all of our videos. Just click on that, and you can select from any of the various packages that we have. We have packages that start as low as $79 a month, but check them out. You'll see that you can do a lot of what we did here, and lots of videos on how to use our tools as well. All right, guys. Hey, finally, if you're new to us and you are liking this channel, I appreciate it for those who do, make sure you hit subscribe and ding that bell, because I got a video that's going to be coming out tomorrow where I'm going to be going into the 10-30 moving average in detail. I'm going to talk about what these averages are, what makes them special, and how to scan on them. I'm going to do that for you as our video for tomorrow. So, guys, thank you very much. I appreciate all your comments. Love you all, and we'll see you again next week on our live session. Otherwise, you'll be hearing from me on our next video, which will be tomorrow. Thanks again. Have a great rest of your day. We'll see you soon. Bye now.